All right, welcome to the Futures Initiative Trading Recap. Tonight we have a special guest, Humble Hustle. He's going to be joining us tonight. This will be his first trading recap. Kind of to sit back and watch, see how things are done. Today was an interesting day, and tonight we have Lucas and Dubster to walk us through their trades, their analysis, and kind of their daily bias. So, without further ado, Lucas, take it away, my man.
All right. So as you know, I've been on a trade I went in yesterday during London session at the consequented encroachment or the midpoint of the 15-minute fair value gap. It has already been on a downtrend. And as you can see, it's here. I went in. My thoughts are it is going to go down. And there's a fair value gap way at the bottom on the 5-minute. So I went in at the midpoint. My strat is always from fair value gap to fair value gap. And the target was it. Full target was hit. However, I got up I got up fairly late because of my stop loss that has moved. So I went in with 1 mini and I moved the stop loss all the way to, somewhere here before I got tapped out. This is done in a way to secure profits. But if I did not move my stop loss, it would have hit the entire target profit. So likewise, with the same idea, I'm in on today's trade. I entered here. Clearly, this is on a 5-minute. It has already been on a downtrend. And I would like to see how it has already rejected the 5-minute fair value gap multiple times. For me, this shows that it's not strong enough. Buyer pressure is not strong enough to break it. And with that current trend, I would like to see it drop all the way to at least 943.50. So that's the two thought process behind my two trades today. Oh yeah, and I went in on one trade yesterday night, or attempted to get in. However, the candles did not drop to 908. That's where one of the fair value gaps are. It rejected off the nice 15-minute fair value gap and all the way up. So that trade was analysis was right, but it did not fall way below the fair value gap to where I wanted to fall. So there you have it. That would be the 3 trades from this week. Over to you, Kwan.
Oh yeah, man. You know what? These are awesome trades. So I really want to know what makes you confident in these trades. You know, why do you feel like you can take these trades and feel confident that they're going to go fair value gap to fair value gap?
Usual from what I see in the past few months that I have already when I started with this strategy was it always seems to have an area of consolidation and rejection. And from what I noticed on whatever time frame it is, it usually likes to bounce the fair value gap and rejects. And I've seen it a few times. If it ever bounced a few times or tested a few times, there's one of two. The one of two options would always happen. It would either break it to the downside or upside. Actually, there's only one. It will either break it to the downside or upside. So as you can see, this has been testing, and this test failed to go higher. So to me, it's an indication that there's no strength to the upside. Therefore, it would have to go down, do a bit of a retracement, maybe tap this fair value gap, give it a second test before going back up.
Interesting. You know what? I like it. I like it. You know, you're playing a retracement off the fair value gap. It's a fantastic strategy. And I see that you're leveraged in for what is the equivalent of 2 minis. Very nice. Welcome
It's
to
Asia.
It's Asia.
it's the paint drying session. So
yeah, I would never do this on the US session.
Oh, you know what? I don't think I've ever had a heartache like watching a trade with multiple minis in, and then realizing I shouldn't have been in the trade in the first place. Yeah.
Yeah. So
Oh,
right now, I am just trying out the Asian and London session.
okay.
If it's good with a huge size and low movement, I'll probably do this before the US session.
I like it. I I like it. I would love to see this transpire into more and more trades, and love to have you back on to walk us through the strategy eventually. You know, just how you see things.
Still learning, but thank you for having me.
Absolutely. Absolutely.
Let me stop my share. Thank you.
Of course. Dubster.
Yep. All right, let's get it. Let me know when you guys ready.
You all set. Let's do this.
All right. So we're gonna go ahead and talk about the first trade. Well, not the first trade, but one of the trades we took today. During price action at this specific time, we've noticed that on pre-market hours, which was Tokyo, London session, we were continuing on the downside. We also know that the trend has been on a previous consolidation. We had a lot of consolidation here, went ahead, we took off, and we pretty much broke the structure here. We grabbed the liquidity off this buy side. So what I expected was that we had to go to the downside and from there fulfill whatever we needed down here. During this specific time, I was actually waiting for the inverse fair value gap right here of this 5-minute frequency to continue to the upside. So what I really wanted was that I wanted to see price action consolidate and lose volume momentum as it was coming into my entry. And as you guys can see here, around 9:30 when market opened, we were still around this specific area. We came down with a lot of momentum. It actually did not wick my limit order. So I like to play after consequent encroachment, right? Went ahead, did not let wick me in, went back up. I was targeting this fair value gap the whole time. As price action chopped its way down here, I was actually happy about the fact that it didn't wick me in. There's just so much momentum downside. But as it came down to target, I was more happy about this decision I made here. And we did end up wicked in here. And unfortunately, we went ahead. We only got 100 ticks. Profit up here did not get target. I did trim at 50 ticks. I went ahead and got in with 2 minis. I trimmed half of my position at 50 ticks and then went ahead and trimmed 3/4 of my position here, and I left a total of 3. About 3 runners, and I got stopped out at break even. So the reason why I like this trade a lot was that the fact that we were at the inverse fair value gap here at a 5-minute frequency, we expected a consolidation toward this entry, and we got our 100 ticks. So I was very satisfied with that. And let's go ahead and talk about this trade. On this specific area, I have a boss marked out. We have this breaker here. I wanted price action to actually come down here into this healthy order block off the 1 hour. So you guys can see I wanted longs. Unfortunately, we did not have that. We went ahead, took out the sell side. As we came down to the sell side on the higher frequency, we tapped into this area 3 times. So we noticed that it was already at a section for rejection. We finished off the 5-minute inverse fair value gap. We continued to proceed to the downside. We kept failing. So in reality, at this specific area, I missed this area here, this red line. I did not have a charted at the time. And I was so focused on trying to get this healthy order block down here for the continuation to the upside, the reverse to this 5-minute fair value gap here. And I did not get it. But during this section, I went ahead and I entered with 20 contracts here. As you guys can see, I actually have 123 ticks of a stop loss, and which is quite a bit. Today, instead of doing a couple ticks off the fair value gap, I went ahead and I pretty much wanted this wick right here. Just the fact that I was in heavy, I was like, you know what? Maybe this wick is going to be good. As we noticed, price action was going against me. I fought at a break even for a while. Went against me. I did have my stop loss here at first. I had a consequent encroachment off of this wick. And as I saw it kind of with a high momentum. It chopped down. I did go against my rules, and I simply just moved it up. And I said, you know what? If it goes against me, it's gonna wake me out, and that's it. As this was happening, as it was going against me, I was actually analyzing the trade, and I wanted to see what the hell price action wanted to do in this specific area. So that's when I came up with this red line, meaning that if this line didn't break structure here, we didn't close below it, we just wicked into this section on the higher time frequency. This should have been a change of character right here for a market structure shift to the upside. So luckily for me, it didn't wick me out. We came back in here. We made about 77, 76 ticks profit, took out my full position, and I did not take this reverse here, but I did go ahead. I screenshotted this trade, and I said, you know what? I'm gonna get out of this play. I expect the upside from here. Little did we know, we did receive this upside. So it was a fantastic analysis to get off full profit here and then not trade for the market. You know, I simply got out of the trade and said, you know what? It's gonna bounce from here. This is my strategy right here. We had to break a structure, fair value gap left behind, stop loss, a couple ticks right here. And this was pretty much a strategy I should have entered. But you know what? I took the green here. It was already a lot of emotions during this time. Luckily for me, I went ahead and I kept them cool and I analyzed the trade as it was going. So I found out that this got cut, took full profit rather than leaving runners, and called it a day on this specific area. And we did end up hitting the fair value gap I wanted at the end, but this was a news candle. So luckily I wasn't in the trade. I would have been wicked out. Actually, it would have hit target first, then came down. So that was the process for this. Moving on to gold. So I'm gonna talk about an entry from yesterday, actually. On this specific area here, same strategy. We noticed that there's no fair value gaps down here, right? We also have a lot of consolidation. We have the sell side liquidity from this breaker side here. And at the same time, we have the inverse fair value gap. So what did I like? I like the entry. Stop loss, however, was at this wick here. And as you guys can see, I went ahead, I entered here. We came down with so much momentum. I was not paying attention to price action. It just fucking dropped. New York open here, fucking dropped. Caught me in. Next, you know, I got an alert. 2 contracts inside here. Came down, almost wicked me out. Luckily for me, I had it. Oh, actually, never mind. It wicked me out by a tick here, and then went back to break even. It still would have wicked me out by a couple ticks here. And next thing you know, our analysis was correct, and this motherfucker took off, right? So we went off the 5-minute inverse fair value gap. I should have noticed this. I went ahead and I did trade it. I walked away from the chart. I did not see consequent encroachment come back into this break of structure here, and we should have caught it again. Unfortunately, I did not enter trade. I called it a day on this specific area, so I didn't come back into the charts. I went ahead and I did take this setup here. I saw 22 ticks profit. The reason why I entered on this specific area was because I wanted to break a structure. So I just simply went ahead and said, you know what, this is going to drop. It has to come back down to consequent encroachment before it goes up. Instead of me taking it the reverse way, I never got wicked in here. So I just went ahead and took profit here as soon as I saw this doji, and I got out of the trade. So that was the whole point of this specific setup. So it's just something against my rules, not a really setup that I would like to take. It's just the fact that I wanted the consequent encroachment off of this break of structure here, 5-minute fair value gap, and we didn't give it. So I wanted to write it down there. That's the reason why I took profit here. Another section up here. This guy right here. Also, these were not today, these were yesterday. Same thing up here. We have sell side liquidity. Went ahead, and the reason why I love this section right here is because it's also the 5-minute inverse fair value gap. Same setup. We do not take these bottom ones. We don't take this guy. We always take the final ones, right? That's why they call it the inverse. Went ahead, took that guy, stop loss. Let me show you guys. Why did I not put stop loss off of this red line? Went ahead and I took it off. I'd rather take the risk taking this high. If it does go above these highs, I expect higher movement, right? So I went ahead and just kind of grab consequent encroachment. I put my first stop loss here. I was, you know what, if it goes against me, I'll go ahead and tweak it and just risk this extra movement. It was just about 8 ticks extra. So went ahead, did that. As you guys can see, if I would have done consequent encroachment, it would have fucked me. This thing went pretty much almost consequent encroachment. So went ahead and I tweaked my stop loss, entered the position here. Next thing you know, we did end up breaking structure at the bottom. So I went ahead and trimmed here. And at the very end, I went ahead and trimmed here as well. This was actually today's trade. So we know here that we also have the inverse fair value gap on this specific area. During this time, it was early in the morning. I was awake, but I was at the gym at this time. I was looking at the charts. We noticed that we went ahead and grabbed the final inverse fair value gap off of this specific section. We went ahead, went back up, came down again, fair value gap here, consequent encroachment, went back up, came down into this fair value gap, grabbed it, and then continued to the upside. Now I was like, you know what? This is actually a change of character. We have a market structure shift. This is our intermediate higher lows and highs. So you know what? I was like, I'll take the risk. Went ahead, drew a trend line. Pretty much it was about this guy somewhere around here. I really like this setup. You know, I was like, you know what? It may respect this trend line. So I went ahead and just drew it for the fuck of it. I also wanted consequent encroachment. Went ahead. I was trying to get in with my first contract here. This was funny. I actually FOMO'd in a bit on this guy. Reason why I wanted it to come down here. I was patient this whole time. I was patient, waiting for my entry. Came down here, and then I was like, it's gonna wick me in. Next thing it doesn't wick me in, fucking tapped on that shit. I didn't want it to take off on me. Next time I got my fucking order somewhere around here because that shit just took off. So I was patient the next time. I did do a limit order here. I respected everything at the end. I put my stop loss, consequent encroachment off of this wick, and we ended up getting wick. Saw a couple red. We were still red. My break even, however, was around here. This was my average. Next thing you know, this motherfucker took off. It just broke structure here. I really wanted to add one more here. Unfortunately, price action took off, never came down, never grabbed in my next position. I did not want to trim here. I just wanted to break, come down, and it just took off. We went ahead, hit full target. I was looking for this gap here, this volume imbalance. We also have a fair value gap here. I really wanted this section. We went ahead, tapped it in. Next thing you know, I was fucking just losing it because it took off 200 ticks rather than taking 48 profits, you know?
Right.
So
Wow.
So
what a hell of a trade.
Yeah, this was a really amazing trade. I mean, we caught the bottom here. Unfortunately, we got wicked out. We caught the bottom here pretty much, and we did catch it. We just didn't catch the whole move. So this is something I will work on later. I also tried this guy. I did not go ahead and enter this trade. I just wanted to see why I wanted to reject. The reason why I did not enter this trade, because I wanted this guy to get wicked out. So as soon as we touched this red line, I was expecting buy side to get hunted, come back down, do this movement, and then I wanted to enter. I went ahead and just charted it just for the fuck of it. And actually it was a good analysis, but unfortunately I was not in this section here. So I was pretty much done with gold at this point. During New York session, I did write down a comment here that I wanted to take this guy out. As you guys can see, around 9:30, it was around this area. We pretty much opened here, took off, but we always know that volatility comes in at 8:30. So as soon as this happened, I wanted this to get run down. So at this point, I was not in the trade. I was still bummed out about this guy. So I didn't want to FOMO into this thing, you know, I just wanted to let it go. And that's what I did. I never went back inside here and I let gold be. One thing I do want to mention though, off of these options trade, we have consequent encroachment off of these fair value gaps. As you guys can see, we have a 5-minute fair value gap here. Those are these scan box right here. We want a consequent encroachment off of this specific entry. I did not enter this section here. Reason why I didn't enter, because my stop loss was so huge. I really wanted this healthy order block. So I went ahead, I eliminated this guy. Another thing, we entered the same position as we did in NQ. Off the fair value gap here, we went to the downside. Stop loss, the same one, as you guys can see. Same stop loss. We came back down here. I actually ended up negative 4% due to this fucking chop here. So that fucked me. I never averaged. I got in about this section here and I just chopped. So this was a good trade. I didn't go out green, but I also pretty much didn't lose. It was negative 4%. So I'll take it. One thing I do want to mention though, on SPY going down, we have a 5-minute inverse fair value gap here. As you guys can see on this specific area, we have the final inverse fair value gap here. We got nothing but liquidity down here. We expect a rejection off of here, right? So what we normally do, we enter consequent encroachment. We want to stop loss below these wicks. Unfortunately, there's so many wicks. I also do not trade SPY, so I went ahead and charted it. And as soon as we charted this thing, I want a consequent encroachment to the upside. This here was a confirmation saying that NQ wants to go to the upside. I did not catch this though. It never hit my mind like, hey, like we want upside from here rather than downside. I forgot about this. I did chart it at the time. It never triggered. So had a brain fire right there. This specific area, as you guys can see, it actually took off from here Another section that I did screenshot and I went ahead and charted the same exact entry off of NQ and QQ. The reason why is because we wanted to help the order block that was down here. Went ahead, fair value gap right here, consequent encroachment to the downside. This, however, at the time I was talking to Wesley and I knew we wanted shorts. Wesley went ahead and took these shorts and ended up making profit from here. We just still wanted some more downside, but there's something I really want to talk about here. Off this 5-minute consequent encroachment entry inverse fair value gap, 5-minute frequency, if our stop loss would have been a couple ticks off of this candle right here, pay attention to how this looks right here. We have a fair value gap here, inverse fair value gap. We have nasty wicks here. But if you guys pay attention, look at this wick off of this candle right here, right? We stop here. Let's say we do it a couple ticks right around this area, right? Went ahead, drop down to this section, pretend this was your stop loss. We're gonna go ahead and move on to ES. On this specific area, look at this setup right here. We do the same exact setup. What do we have? We have the inverse fair value gap. We actually have no wick here on this candle. We do have it on SPY. I think these two candles went ahead and united. And if our stop loss was following the rules a couple ticks below this guy, we would have been stopped out. As you guys can see, another question here, would have I chosen consequent encroachment off of this candle due to the fact that it was just a liquidity? Would we have been stopped out? And we still would have been stopped out. So I personally do not trade ES. I do go ahead and chart it because I like the confluence, but this is something I did notice today. This is crazy. I mean, we had two different candles, same setup, same entry, but our stop losses here, I would have gotten fucked on it on futures, and on SPY, I would have been okay. So those are just little details that I've noticed today and wanted to throw it out there.
Very nice. Very nice. Especially the trades.
What do you guys think?
So as it relates to
Brother. That was awesome.
There's a lot. There's a lot.
That was a lot, bro. But honestly,
yeah, that was awesome. That you have a lot. You had quite a few trades. You went over yesterday's trades, today's trades, kind of the where, when, and why, which is awesome. The inverse fair value gap works phenomenally well. And then translating that to the, I shouldn't have FOMO'd in, awesome, but it worked out because the gold trade, absolutely ridiculous.
Yeah, that gold trade was pretty crazy. It actually blew my expectations, to be honest. It really did.
Unless someone's leveraging in 5 contracts, I've never seen anyone make $2,000 on gold in a day. So that's a first. So congratulations on that.
Yeah.
But yeah, so it's a lot of information really packed in, and Matt, as you can see, there's a lot that goes
Connor, I think
into
you're cutting
this.
out, or I'm just not hearing you, dude.
No, he's cutting off pretty much.
Okay, he is. I thought it was just me, but yeah, you're kind of cutting
All
out.
right.
Like, I
Is
can't
that
understand
better?
what you're
Yeah,
asking.
going in and out of the voice. We still can't hear you if you're saying something.
All right.
Make sure you toggle that mute button.
It's probably cursing over there.
Is that better?
Yeah, we can hear you now.
Yeah, I can hear you now.
All right, word. Yeah, no, I was just saying, like, this is a lot to kind of
You're
follow.
gone again.
Like, at first, it is a lot to follow because you have a lot of fair value gaps. There's a lot of strategies working at the same time. So it's a lot of key features that are hitting all at the same time and in order. So, you see the displacement, you see your fair value gap, and then you see the return of price. So a lot of this hinges on being patient.
Yeah. And one thing I did learn is that when we're inside a trade, rather than waiting and just waiting to see this thing go green if you're against you, one thing I did today and I'm very happy about, analyze the trade. Why the hell would price action go continue to the upside rather than to the downside, And that's the only way I found this red fucking line right here. I would have never noticed this guy was hunting already at the time and expected this to go to the upside if it wasn't for the fact that I was already red and I went ahead and analyzed it rather than fucking stressing the fact that this shit was against me already. You know, I was already down pretty much 100 ticks at the time. I was in with 2 minis. However, I did not go in with 2 minis at the 0.5. You guys know I always average against myself. Went ahead, took 6 contracts here, 6 contracts up here, 6 contracts up here. So break even was somewhere around up here. So we did take some good movement, some good profits, but either way, it was still against me, you know? So that was the whole point of this, like figuring out why it's going against you is probably one of the best things that we can do, you know? And I've started noticing that that's the best thing I can do, because at that point, I start analyzing the trade. If I know that it's going to go against me and this thing's just going to continue, why not just take the trade off at this specific area rather than losing the full profit, or simply trust your analysis and hope for the best, you know, at that point.
Absolutely. Absolutely. And like I said, you know, what you had essentially gone and taken was perfect. It was spot on. And like you said, you know, you trusted your analysis, and minus the one time you moved your stop loss. You know, in this time it did work out. I would say, you know, it's not a negative thing
This
because
is just gone.
Yeah, dude, you're choppy tonight, bro. You're kind of like chart.
all right.
Barcode right here.
All right. Is that better?
Yeah.
All right. Yeah. So I was just saying that, you know,
No.
like moving your stop loss is a
Gone
very
again.
dangerous game, but you came at it with the mindset of, I'm moving it back here, and that's it. If it stops me out, it stops me out, and that's the end of the story. So in that case, it really is acceptable. But
Yeah.
when it becomes a consistent thing, and I believe I mentioned this scenario, I was actually in live trading with Wesley and Nate. You know, I let them know, hey, you know, oh shit, I just broke my rule. I took $1,000 loss instead of being $300 because I really believed the price would have bounced, but it didn't. And it just kept falling. And that really messed with me. So
Yeah.
all the guys, this is what happens when you don't respect your rules. This is exactly what happens. So it was good to see that, you know, you approached it with the mindset of, if it stops me out, it's gonna stop me out, and that's the end of it.
Yeah.
Well, awesome, man. Look, fantastic trades. Your charts are very well done.
Yeah. Thank you. What about you, Humble? Were you able to tag along, follow everything?
Yeah, honestly, it's been a while since I traded, but a lot of these things, and I definitely all familiar, and I
Good.
was definitely able to follow along and like see where you're going with and how you were picking stuff. And a couple things is like, what were you saying with like you have like your Fibonacci little thing going on? What were you calling that again?
Oh, the Gambox.
Oh, I was looking for discount or premium. So this guy right
so
here.
you're doing that actively during the trade. You're not doing it in just like one big section.
Well, normally, let's say, for example, on this specific area right here. No, I always choose the trade that costs the pump or the dump. So for example, on this specific area, I will go from this low to this. And why is because this is what caused the momentum for the break of structure. So what do we expect here off of this section? We know that off of this specific area, we want it to come back down into a discount price for a continuation to the upside. Reason why is because we want to target, this is a massive wick off the daily. So I wanted to target that guy. Why was this entry real good? This entry was really good because of the break of structure here. We had the intermediate terms here. We also came back down into a discount price. And there was a fair value gap at this specific area right here. Unfortunately, if I would have taken this trade, this is ES, so I don't take this trade, I would have gotten stopped out based off of my specific setup where I put my stop loss at, right? I do a couple of ticks off of the fair value gaps candle. I would have chosen this candle right here, this bottom wick, and I would have still been stopped out. Would I have chosen consequent encroachment off of this guy right here? I possibly could have, depending, but the fact that we came down with so much momentum, I honestly would have kept my stop loss here and I would have taken the loss. Was the analysis correct?
What makes you take the consequent encroachment thing that you just said? Like, how do you justify where you're taking that at?
Oh, I simply do it. So if I see a massive wick like this, so I normally look for them on the 50-minute. So we normally see that price action likes to come down into, so we say we have a massive buy sell liquidity here. If this candle opens, it normally has to retrace into the middle of this specific wick right here, right? So I normally look for the consequent encroachments. I expect this candle go back into here to the midpoint of this wick here before it continues its trend. Stop loss there is because if it goes above this 0.5, I don't expect this to be a red candle. I expect this to be a green candle and target consequent encroachment off of this guy afterwards. That's the reason why I choose that, because there's always a high probability chance that I've noticed that whenever price action goes above it, it's most likely going against me.
Okay, so you're like kind of getting a little like I don't know, analysis or whatever of what's going on of it
Yeah.
getting what direction.
Yeah, pretty much. That's pretty much what I target.
But you're
Yeah.
doing it like live, like as it's playing out or getting ready to build up.
Oh yeah, so as soon as I see this break of structure up here, I'm already have this fair value gap here charted out off the 5-minute. I already know where my entry point, my limit order is already set, my stop loss is set, and my screenshot for this trade is already posted. You know, I already expect this to happen. Now, does it go against me? As it goes against me, if I see this momentum come crashing down with so much momentum, then I start analyzing what's going on here. Do I move my stop loss? Do I figure stuff out? Do I leave my stop loss? Do I trust the analysis? What do I do, right? So if I would have played off of this fair value gap off the 50-minute, I should have put my stop loss down here. But we were playing off the 5-minute. So at this specific area, I'm expecting it to play off the 5-minute frequency here. So I expect wicks here. I chose this candle and I would have lost the trade. So those are just little details. Coming back and forth from frequency as the play is coming in is something that I've been getting adjusted, and I'm still getting adjusted to it. But I think it helps a lot because then you can find out what's happening on these bigger time frames, looking for whether if it's going to continue to the upside or if it wants to consolidate, right? So those are just little details that I've been trying to catch. So
I like it a lot.
yeah,
It all looks really freaking clean. Like you understand exactly what is going on, and then they are happening. That those moves are happening. They are building up to do that.
Yeah, and then it's because the hard part. So when I first started doing this, the hard part was choosing which fair value gap. So right here we have a 1 hour inverse fair value gap, right? So why choose this fair value gap over this 1 hour fair value gap? That's the question I kept asking myself, and even up to this day, I still ask myself this question. And I even ask Quantastic, because Quantastic normally calls this fair value gap a valid play if it has not been closed in. If it gets wicked in, he still considers it. I personally eliminate, I go ahead and mitigate the fair value gap as soon as it hits consequent encroachment. If this thing wicks down to consequent encroachment, I won't play this trade again. I'll simply miss it if it does go where it's supposed to go, or if it's a losing trade, it does not matter. I will stay away from this if it hits the 0.5.
What about the fair
So
value gap?
the issue here was at
right
the
above
beginning,
it.
why choose this guy? Why not choose this one? Or why not choose this guy right here? You know, so those are little details and questions that I kept asking myself. So little by little, I've been analyzing, it's like, okay, I would like this guy to be respected once it comes down back into it. So I expect a bounce from here. So why would I expect a bounce from here? Jump down to the 5-minute. And then I'll ask that same question again. Now, where's this breaker candle? Still in the same area? Yes, it still is here. So I expect consolidation here because I wanted to reject. So do I take this setup here? I do not. There's no fair value gap here. There's nothing down here. So I expect this to actually come down into this 1 hour. But why would I not take this trade? I will not take it because there's no confluence here. There's no 15-minute fair value gap. There's no 5-minute fair value gap. There's just a 1 hour fair value gap. So there's no reason for me to even expect this to come down here. So I expected the chop. As soon as the chop comes up here, do a break of structure, hit a momentum, broke it here, expect the fair value gap, come back down, and then continue to the upside. There's no reason for us to choose this since there's no confluence here. There's a bunch of confluence here. We have this guy here. We have the fair value gap here. And we also have a discount price here. From this range to this range, came back down into the 50%, came down to discount, and then that was a possible cost scenario. So we went ahead and took longs.
So Dubster,
Mm-hmm.
I think you missed the fair value gap. Go back to the 1 hour.
Let's see. Well, where was I? I think it was up here.
Keep zooming in.
Oh, this guy right here.
Look
yeah,
at that
didn't miss
one.
this one.
Yep.
I didn't see
So-
that guy.
So you were right to mitigate the first one. Absolutely, we're not going to pay attention to that one. But that second one, look at the bodies of the candles.
Yep.
Never even entered in. So that fair value gap is kept open. Yes, we wicked through. Absolutely. And even if you had entered in a consequent encroachment, the worst you would have suffered is 3-4 ticks against you.
Yep. But at the same
Which-
time, at the same time, I personally would have never taken this due to no confluence here off the 15-minute. You get what I mean?
Not exactly, because with the higher time frames, fair value gaps serve as a larger or take priority over the 15-minute.
Yeah, true.
Because
Yeah, I just,
if we have the fair value gap on the 1 hour and then we go and look at the same zone on the 15-minute, we see that we would actually have a fair value gap that is created, gets wicked into at consequent encroachment that would allow us to come through, and then we never return back to that. But it came all the way down into that bottom fair value gap on the 15-minute.
Yeah.
So depends on how you would have wanted to play it, but if you were playing this based on the order block, and try and take halfway in between on the order block, yeah, we're not getting wicked in because it came and left, and when it left, it said see ya, I'm gone. But if I'm not mistaken, this was also a news candle.
I believe so. Well, this was the opening candle at 9:30 New York.
Right.
I did not take this trade though, but this was the setup. But
Yeah, absolutely. Like, regardless, you stuck to your rules. You played based on your strategy and not try to FOMO in.
Yep.
There is nothing more that can really be said about that, because
Would you have jumped in right at that
what you
blue
are supposed
line?
to be doing, which is why you are consistently taking winning trades.
no.
Because
This one
that's
right
like
here?
because that's close to 50%, and it's kind of getting ready to bust through.
Yeah. I have never really paid attention to them. I know it always comes back into them. But no, I wouldn't know where to put my stop loss at that point.
I gotcha.
I will have to figure out how to play this. Yeah, but you see how right here off this massive 1 hour, there's a giant wick. And
Yeah.
there's more giant wicks here. So I know I want run is main target here. I want to target these guys, but we failed to break this section. So now the fact that this guy's showing you that it wants upside momentum, then we target this guy, and then we target this massive one. So I always target the consequent encroachment.
I get you. The largest candle upward towards the upside.
Yep. Those are your quitting. So those are pretty much, I see them as hunts. Obviously, sometimes we run through them, but I always expect to target these. These are always my targets of the higher time frequency. And as Quantastic said, the higher time frequency does get respected more than the lower time frequencies. And that is true, which is why I personally like playing off the 1 hour, because they do get respected. Then I expect confluence at the lower time frequencies
And
for
then you
a
start going to
sniper
other
entry.
time frames and find out exactly what it's going to be.
Yep.
So you could also look at this if you zoom out on the 1 hour. I know that you have a lot on your chart at the moment, but if you look at it, you do have that propulsion block that was made. So you see the initial liquidation on the downside. Yep. And then when it comes back, it retraces back into that order block, but only halfway. And then you get another liquidation. Same thing. Came down halfway. So you're coming down halfway again, and then halfway again. So what you're really having is an indication from price that, hey, we are going to move up. How fast? I don't know. But price wants to move up, especially after that second liquidation and failing to go lower.
All right.
But
Well-
overall, fantastic trades.
Yep.
Awesome.
Crazy setups this week. Crazy. All right, let's go ahead and stop sharing.
It's that 4 a.m. workout, bro. That's what's going on.
Seriously. I'm already pumped at that time, dude.
I don't know. You got the pump going. You're freaking rolling to the studio, dude, and just lay down the groundwork.
All right. So my chart is not as colorful. So I did not take a lot of trades today. I took 2 trades. One early in the morning. I passed out before I could see it through, but it hit target. Then I took another trade right where you said Dubster, you wanted to get in, but it didn't really fit your strategy, and you didn't really get whipped in on that one.
Yep.
So you actually took the downside here while I took the upside.
Yep.
So let's talk about this trade first. So why did I even take this to the downside? Because we had broken the highs of the previous day, broken the highs of a very long time. So we had swept all buy side liquidity, right? So I didn't need to take this to a higher time frame. I didn't need to take this, to additional time frames. I could have stayed right here and saw, okay, you know what? We took this straight up, took all buy side liquidity, and then came down. I did not get wicked in at this top candle. I got wicked in at the bottom one, just below, because I saw the momentum in which we came back down. It was immediate, right back down. So I held it, and I really wish I should have trimmed, but held it all the way through this little chopping block. By the time I got down to here, I passed out. But this was my target. Why was this little gremlin my target? Well, this was right before we hit the consolidation, right before we hit our order block, if you will. So if we take that to a 15-minute time frame, we actually have a liquidity void or volume imbalance right down here. So I wanted to see that shit get run straight through, and it did. So this was a trade I was in with 3 minis, let it run. This actually brought an account that was almost dead back to life. So I'm happy about that. But then I didn't really get to trade this morning. I didn't want to force a trade. I didn't want to force a trade. I did force a trade on options for calls, and got absolutely smoked. The only saving grace was I hedged with puts towards the end of the day, which barely came out positive. But let's talk about the second trade. So this is, again, something that I have been working on, looking at liquidation candles, or the hunts, the stop hunts, the sell stop hunts, and the buy stop hunts. So these large liquidations right down here, we had it liquidated and really sought price. Where I had initially thought that price would stop was right up here on the breaker candle. So if we take out a line to the top, wow, no one can see that because it is just pure white. There you go. All right. So this is essentially where price reversed. I wanted to get in a little bit earlier, but I didn't. I saw the retracement and did not take this candle. But I took the next one because I saw that we didn't create a lower low. So I said, okay, you know what? this almost seems like the lunchtime macro. The lunchtime macro, for those of y'all who don't really know, it happens after London close. So once London closes, you get that nice little run up. It should come to consequent encroachment of the previous 5-minute candle or 5-minute order block. Then it runs down, taking and causes a reverse of trend. So the trend today was death, right? Just straight down, nothing but downside. So because of that, we saw that the lunch macro was going to take us up. Now, this came a bit earlier than I had expected, because the lunch macro requires that you have a liquidation, then you come to consequent encroachment of that liquidation, and then it takes you up. So you had something similar here, but I rode this all the way up. I honestly would have not done too well, and I would have added here, or I would have taken myself out thinking, oh, this is going to go right back down. So with that being said, we took this play right down here, kept it going, and we knew that we were targeting the highs of this entire range. So the last impulse wave down, which was right here. So once we came up close to it, I got out. I said, you know what? We're good. We're good. I went out. Get me out. So that was those are the two trades I took today on futures. Now I held all my call contracts and I got puts over here for the FOMC minutes. I really want to see some downside, and we did catch some downside, but not much, around 10% max. So with that being said, it was good that we got out of the trade. Tomorrow should be much more interesting, and I'm eager for price to tell us or show us where it wants to go. I would love to target this consequent encroachment up here, because this was just a straight up hunt. Like, if you even see, it came right up to the only 5-minute fair value gap, and at consequent encroachment too, which was ridiculous. And then took out all the sell side too, right? So crazy wick for the FOMC minutes. I was honestly expecting a lot more movement and not just a chop to the end of the day. But again, that remains to be seen where we end up going from here. Now, I do expect price to come down, grab some more sell side, and then run the buy side, create potentially a lower low, grab the rest of this fair value gap before we skip the entire daily fair value gap. I believe that that's pretty much out of the question for the time being, and then we'll take another run at the highs. But those were my trades of today.
Yep, I remember those shorts last night. I actually went to sleep at that time.
Yeah, so we'd
Not
love
bad,
to
not
see,
bad.
what happens later. And I am eager to, see more people in this community in the trading recaps, sharing their trades, their successes, even their losses. I would love to see those too, because at first, Dubs, if you remember, that's all that we had were our losses.
Oh yeah, there's nothing but errors, misplacements, mistakes, just back to back.
You know what? But doing these trading recaps, we grew to understand, oh, here's where we need to do. Here's what we need to be looking for. Here's how we can tweak our strategies, because you and I trade almost exact.
That's true.
Slightly different entries, but same targets.
Yeah, same targets for sure. Just different confirmations, but yeah.
Yeah, and we end up being each other's confirmation. Sometimes,
Yeah.
sometimes we're just like, you know what? I'm going against you on this one.
Yeah, it was what, like Monday? No,
Oh yeah,
last
yeah, yeah,
Friday. You and
Yeah.
Mango actually went along. Wesley and I were actually in shorts. We both ended up taking profits, but obviously on the long run, your analysis definitely took off. We ended up taking the scalp rather than the long term. But hey, sometimes you got to follow your rules, right?
Look, if you follow your rules, you can't be upset if you lose, and you can always be happy when you win because you're following someone else's rules. Then you don't know why you're taking the trade in the first place. It holds no weight.
Yeah.
But how did y'all feel about trading today, Lucas and Dubster?
I expected a choppy day, 100%, due to FOMC. But even though it was choppy, I was patient. I didn't force anything in. I saw my targets, went ahead and took them, and as soon as I was green and I saw that it was still chopping, I got out of my trades and called it a day.
That's fantastic. You know what? Fantastic. Lucas, what about you?
I think Lucas had to go after 40 minutes.
No worries. Well, I do have one last question for everyone. What would y'all like to see from yourself? You know, what is one thing you want to work on? You want to get better at with trading?
Add-ons. So instead of trimming and actually been practicing, I've been showing them on the screenshots that I post. Instead of trimming or still trimming, I would like to trim at the top of the breaker structure. On the reversal, I want to practice more on adding more to my contracts. Or maybe I shouldn't trim and just continue adding more. That way my average doesn't get fucked. Because I've noticed that when I trim, my average obviously gets fucked due to the fact that I have a lower amount of contracts. But I think that's something that I've been trying to really figure out, try to catch and hope for the best. Because I think doing that allows me to catch more profit. The problem here, and it also allows me to hold with runners longer because I like personally trimming after 50 ticks. That's my first trim always. Stop loss goes back to break even as soon as I trim 50 ticks. And then from there, I love to add on and continue. So that's something I'll be focusing on still and hope for the best.
Sounds good. I like that a lot. That's actually very important. Technically, it's more advanced. And I love that. But you know, it's something that is very beneficial.
Yeah.
So I applaud you for taking that on.
Thank
So,
you.
Yeah. H, I saw you had joined. Welcome.
Yeah. Yeah. Thanks. What's going on, guys?
Thanks. Would you like to review your trades today?
Um, well, the only really trade I took was just how I've been doing it. Just going in with one micro and holding for like 10 seconds and then getting out so I could get this funding. So,
rinse and repeat.
yep, pretty much. But I will not be doing that anymore because today was the last day.
Hey, congratulations.
Thank you. So, tomorrow will be interesting though. I did see that we have 8:30 news. You know how I am with my 8:30 news.
Absolutely.
So yeah, can't wait for that tomorrow. And then maybe I'll be able to go over it in the recap.
Yeah, I'll be looking for it. I'll be waiting to see that and see how it plays out.
Yes, sir. I'm excited.
All right. Is there anything else? Any questions, concerns, comments? Anyone would like to add on?
I am
Um,
good on my end.
I do have, okay, so I didn't look at the chart at all today,
Mm-hmm.
and I'm looking at this thing to the left right here.
This
Yeah, that thing. So what was going on with this?
that's FOMC minutes news. So it wicked. So this essentially is what is called clearing the board, right? It takes out all buy side and all sell side.
Okay.
So you see, it broke all lows and broke all near term highs.
Right. Did you watch this? Were you on the chart when that happened?
No, I was at work.
Okay. Dubster, did you see that happen? Because I'm wondering what did it take first? Does anyone know?
It took the buy side first,
Okay.
but it could easily be the other way around. And if you're on the wrong side of it, your account's gone.
Oh yeah. I mean, look at that. That's just ridiculous.
Yeah, that went 40 some odd bars.
That's pretty nasty.
60, 70 bars. No, I'm sorry, 40 bars on both ends. Yeah, that's pretty nasty.
Yeah, for sure.
Well, cool. Well, if there is nothing else, I appreciate everyone taking the time tonight, coming in for the trading recap, and we will see y'all soon for another one.